The US Securities and Exchange Commission, SEC, is now not unexpectedly sending somewhat negative Bitcoin, BTC, and ethereum, ETH, exchange-traded fund, ETF, signals that might be a good sign for Grayscale Bitcoin Trust, GBTC. As is practically notorious by now, an American ETF is a rather elusive creature, not because there's nobody to launch it, on the contrary, many have tried over the past 8 years, but because the country's regulator keeps rejecting these filings left and right. For the SEC statement, BTC, including gaining exposure through the Bitcoin futures market, is a highly speculative investment that comes with volatility, lack of regulation, and fraud, manipulation potential. Since the Division of Investment Management, IM's positions issued in a 2017 letter, the Bitcoin futures market has developed, they noted, seeing increased trading volumes and open interest positions. It has consistently produced a reportable price for BTC futures, and has not presented the custody challenges associated with some crypto-based investing because the futures are cash-settled. The IM with the Division of Economic and Risk Analysis and Division of Examinations will closely monitor the impact of mutual funds investments in Bitcoin futures on investor protection, capital formation, and the fairness and efficiency of markets, they said, and this includes, among open-end funds, investment in the Bitcoin futures market should be pursued only by mutual funds with appropriate strategies that support this type of investment and full disclosure of material risks, the staff said. But closed-end funds don't provide for daily redemption of their shares and don't present the same types of liquidity challenges as open-end funds, they added, so any closed-end fund that seeks to invest in the Bitcoin futures market is encouraged to consult with the IM prior to filing a registration statement about the fund's proposed investment, anticipated compliance with the Investment Company Act and its rules, and how the fund would provide for appropriate investor protection. These comments come after Gary Gensler took over as the SEC chairman, with his early comments throwing cold water on hopes that the commission might approve a BTC ETF this year. Bloomberg Intelligence ETF analyst Eric Balchunas argued that with this note the SEC is effectively telling retail investors to keep using GBTC, while a BTC ETF wouldn't even be among the top 50 most volatile ETFs in the country. Before the most recent warning by the SEC, Balchunas said earlier this week that he was more optimistic than ever that 2021 could be the US BTC ETF year, for 4 reasons. 1. Greater institutional adoption. 2. Intense growth of default crypto products like GBTC, which are not ideal for retail investors and the SEC knows this. 3. Canada's ETFs, which have worked fine and seen a lot of action. 4. Gensler coming in as chair.